This conference will now be recorded.
Okay, good evening, everybody. This is Greg Morton. It is Saturday, January 7th, 2023, and this is the weekend video update for Canslim Growth Stock Investors, brought to you by the Greenville East Side Meetup Group as well as the Stockyard Meetup Group, which are the two that I coordinate. So as always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses, so we always want to learn first and only then invest. And of course, Canslim's the registered trademark of Investors Business Daily. So this weekend, let's look at the M factor. Interesting week. Let's talk about a current market review, constructive action, destructive action, accumulation, distribution. We see stocks setting up or things still chopping around. Talk about the current trading plan or action plan, and then our upcoming monthly meeting, which will be on January 18th, 2023. So as always, we'll start with the first or most important letter in Canslim, which is the M. And as O'Neill teaches us, we always want to interpret or diagnose. We do not want to predict. Of course, there's a lot of people predicting this time of year, like there are at the first of each year, and I just tune all that out. I really don't even listen anymore or read it anymore. But what we do want to look at is the action of leading stocks, the actions of stocks owned. We'll see that CPRX hit the profit goal, but there was an ad made on the follow through day on Friday in the group teaching portfolios. So we'll talk about that briefly. And then we look at the market pulse, distribution day count, price and volume on the indexes, most of which I kind of incorporated into the coloring book. And we saw a lot of changes this week on Friday, as we'll see in a few minutes. So let's hop out of here and go over and look at that. Go to MarketSmith first. So we'll look at the NASDAQ. Here's where we are. We did have a follow through day on Friday, which was pretty significant, up 2.56% on above average volume. So that was nice there. Index is still, just retook the 10-day line, the pink line, bumping up against the 21 day, still below the 50, still well below the 200 day. So it is a follow through day, but sure is far down here. Look at S&P 500, also had a follow through day on it. It did come through the 10 and the 21, but is bumping its head on the 50. And of course, previously you can see it tested the 200 here, tested the 200 here. It's failed back to testing the 50. NYSE, this one looks better. It is above all moving average lines, so that's more constructive. Dow, we also had a follow through day there. So we had 3 follow through days. And it also is above all the moving average lines. So it looks the strongest of the indexes, which had the follow through day. The Russell came back through the 10 and the 21 day, and the S&P 600 bumping up against the 50 day. So the follow through days there, with regard to the moving averages lines, still a lot of battles sort of looming ahead. If we go over to the coloring book, so early in the week, the NYSE did flip up to yellow on Wednesday. It was still mostly red. We still had this distribution recently with clustering, but then on Friday, again, we got follow through days on 3 indexes and a lot of MMTS changes. So the NASDAQ stayed at red. It's the worst performing, but the S&P 500 went to yellow, and then 3 of these went to green, the NYSE, the Dow, and the S&P 600. So for those to flip up to green, you have to have the 10-day moving average line up, the 21-day EMA moving average line has to be up, and it has to be at least 1% over the 21-day line. So these are obviously trend change indicators that I'm studying, and IBD went back to confirmed uptrend based on the follow through day. Window of opportunity signal is still closed, and new highs versus new lows. We did have more highs than new lows on Friday, but that's been a battle on a NASDAQ and has been red for a long time. We did have the follow through days. It's odd. I did not see any Canslim stocks that were breaking out. I know Marcus Smith had like 15 breakouts listed, but they didn't have the Canslim criteria, or they didn't have the volume. So I don't have any on my list because I only show the ones I consider to be Canslim breakouts. So that's just something to be aware of as you're studying the follow through day and what you're going to do, and we're going to talk about that. So, the group teaching portfolio, to just take a look at that, still has the shorts from the end of last year, and then based on the follow through day, just did a 1/2 position buy in RSP, which is the equal weight S&P 500, and the equal weight looks better than the weighted S&P 500 itself. And we will can take a look at those charts. Let's see, I had them in here. So here's the S&P 500 just so you can see it. So see, it's butting up against the 50-day. But if you go to the equal weight, same stocks, just weighted different, see how much better that looks? It's above all moving average lines. So that's just why I went with the equal weight, and the S&P 500 looked better than the NASDAQ, and the Dow's only 30 stocks, so I just don't like it as much. So that was how the decision was made. So we put half of that in the a half size position, just because there weren't other breakouts, and there were just the follow through day didn't seem super strong. A lot of it was based on bounces in stocks that were really beaten down. So I followed the rules, increased exposure, but went with that for that reason. So we'll go back over here. Current market thoughts, things to keep an eye on. Of course, the Fed speakers are back out, so we're going to be hearing them over and over still. QT is still also taking money out of the market. Got the war in Russia, Ukraine continuing. I think it's a recession. They just changed the definition, but still think it's there. And we're 13 and a half months into the bear market. So my current market view, based on everything I just showed you, saw those MMTS changes, but we have the indexes bumping up against those moving average lines. Distribution days are still high. Window of opportunity still closed. Still more selling days than buying days. I have 12 selling days and only 6 buying days in the last 25-day window. So it's still a distribution dominant tape. And the new lows are mostly outweighing new highs each day. But maybe that changes this week. We'll keep an eye on it. So current market signals for me, you have the green light. We do have a valid follow through day, but I think it's slow. Proceed with caution for the reasons previously stated. So also remember that 1 or 2 good, meaning they're working, decisions beget more potentially good decisions. So if that RSP works and there's some other entries, then can wade in further slowly is how I'm looking at it. Want to be disciplined. Remember, our goal is only to own 6 to 10 stocks total in a concentrated Canslim portfolio. So we want to be picky. Stocks need to earn the right to get our money to be in our portfolio of the best of the best. And as Mark Minervini has said, no forced trades, no audibles are good things to remember. And I've talked the last couple times about asking the right question, so I want to go back to that. Can I objectively identify a change in trend, presenting a low risk opportunity to start getting back in? How do you do that? Got to understand the M. So we're looking, has there been a valid follow through day? So the answer to that is yes. Has the window of opportunity opened? No. Has the Fed pivoted? No. Is the buying count day higher than the selling day count? No. Trend of new highs exceeding new lows? No. Are the indexes constructive in light of the moving average lines? No. But we only need one yes. And then we want to see top-notch fundamental Canslim stocks set up in full and proper bases and breaking out. or giving us early alternative entries that are valid. And that's what was really missing on the follow through day. And that's what drove just a 50% exposure to the RSP ETF for that reason. So just because there's a follow through day, we really need this number 7 also to warrant ramping up exposure more quickly. I guess is the way I think about it and say it here. So the rule is O'Neill says you have to buy something breaking out on a valid follow through day. There actually weren't any breakouts that I could find. So my rule is actually that I have to increase exposure on a valid follow through day. So that just is a little more flexible way of saying it, I think, and allows using the index ETFs. And they've talked about on IBD Live, it's valid to use those. So that's what we did this time. There's still plenty of other things you ought to be doing. Worked on post analysis for 2022, best trade, worst trade, biggest trading mistake in 2022. And, I gave you a list of those. Do you have written sell rules? Did you not cut losses short? Did you not have a good weekend routine? Did you not keep good records? And maybe you have a couple of those to work on. I don't know. Or did you buy at incorrect points on the chart? And reminders, EPS season is getting ready to crank up. We're going to have 5.5 months straight. So that's the longest consecutive period in any calendar year. Viable gap ups can be good hunting ground if you have a system and if the M improves. Next Thursday, we get the CPI. There's going to be a lot of eyes on that. We'll see how the market reacts. And then we have the next Fed decision is actually February 1st. So we have that coming up too. I think overall it's still a difficult environment, even though we have a green light. So our monthly classes, the next one's January 18th, 2022. So you can register at the Stockyard Meetup site. However, if you signed up back for the October meeting, I'm going to send you all the access information. Tuition per meeting is $12. You can attend live if you want to. Everybody gets a recording, slide deck, links to webinars, articles that we talk about. First timers signing up get a copy of the most recent monthly meeting. And here's our agenda. So you can just look at what we'll be going over, including talking about the short that's in the group teaching portfolio. And if you're interested in prior teaching sessions, if you don't have written rules, these three, I covered that in great detail. And then if you don't have a good weekend routine, somebody was asking me about that on Twitter this weekend. So the September and October meetings covered that. In fact, this full 2-hour meeting was almost fully on the weekend routine. So if you're interested in those, you can email me and I'll send you the information. Meetup websites are Greenville Eastside IBD meetup site and the Stockyard meetup site, and the Stockyards for signing up for monthly meetings. You can follow me on Twitter, and of course you're on my YouTube page if you're watching this. So there's weekend reviews there and some other teaching videos on the 8-week hold rule, bottom basis versus bottoming basis, and some others that hopefully help you. So that's it. It's late. I'm out of here. Y'all have a good weekend routine. Bye.